All right, welcome everybody. This is Dr. Keith. How's everyone doing? Good to see all your faces in the room here, at least your names, right? I feel like I know a lot of you, even if I've never seen you. So how's everybody doing? Happy middle December, right? Let me know if you don't mind. Just type in a 7 if you can see my screen and hear me okay. It should be saying seasonal trading, futures, Forex, and stocks. Excellent. Daryl, nice to see you. John. All right, well, I promised you I would start doing more of these events, give you some information that I'm seeing, go back and look at some things that we looked at. And then part of today's session is actually going to be letting me know what you want to look at. And we'll look at my system. And based on what you want to look at, we'll see what future trade opportunities might hold us for that. Okay, so it should be lots of fun. All right, so we'll get started. Before we get going here, though, I always like to do the risk disclosure. So go ahead and take a couple minutes and read this. But basically, folks, all this is saying is that you should not trade with money that you cannot afford to lose. Right? Today is for educational purposes only. I'm not a registered financial advisor, although I have my doctorate in finance. I've been trading for over 15 years now, okay? But everybody has their own risk tolerance. You'll consult with your financial advisor and so forth, okay? You know, what might be a lot of risk for one trader may be nothing for another, right? So that's why that's always a tough discussion to have. Some of you have $5,000 accounts, some of you have $3 million accounts, right? Okay, so some of the new folks that are in here, I'm not going to spend a lot of time on this. You can go back and watch some previous recordings, but I do like to give you a little bit about my background. So I've got my PhD in finance. I've been teaching finance and trading at several universities for a long time now, almost 15 years. Initially, when I started teaching, I didn't trade. And then when I got into the seasonality concept, that's when it really started to spark my interest. That, well, first of all, two things. One, if I'm going to teach somebody to do something, in this case, at the university level, I think I should be doing it. And then two, when you see some of these probabilities, and that's how I trade off of high probability trades, why wouldn't I want to put my real money in it, right? So that's kind of a little bit of background. It basically came in around 2010 when I was introduced to seasonality, and I think you could say after that, the rest is history. I mean, just phenomenal trade setups, you know, week in and week out. It doesn't mean they all work out, right? It'd be foolish to think they would. But if you can give yourself that edge, you know, most traders don't even know about seasonality, believe it or not, okay? And I trade all markets, you know, stocks, futures, Forex, because all three of those major markets have phenomenal seasonal moves. I live in Central Oregon, which is about 20 minutes west of the Cascades. It's just a beautiful area of the country, high desert. We got all kinds of things with our horses, the mountain biking, the skiing, everything we wanted. We moved here about 5 years ago. And the reason why I got specifically, most of my trading is swing trading, is because as much as I love trading, I don't want to be in front of the computer all day, okay? Only when I want to be in front of the computer. And a lot of you have full-time jobs, you know, and that's why swing trading can really do good for you, because you can do your research at night or early in the morning, place your trades, walk away. And what I've realized through all the years of trading, the more you stay away after you place your trades with the confidence, the better off you're going to be, because what happens is we all do it. If you watch a trade as it's going, you try to screw with it, right? Pardon my French. And when you do that, you get out early or you get out late. Psychology plays a big part in the trading, right? So be honest with yourself on that too. There's nothing wrong with understanding that. And then recently in October, I started my own business, seasonaltraderpro.com. Okay, so that's just a little bit about me. All right, so, and I believe if you go back and watch my YouTube video from 3 weeks ago or so, and publicly, I was getting everybody this Christmas trade. Okay, I say Christmas because you could have made enough money to buy your Christmas presents, right? And what I was showing everybody back then was just from a pure data mining perspective, okay? From 11/21 entering the ES, the E-minis, okay? Exiting typically on 12/6. Again, these dates adjust a little bit by a day or two, like right here, based on weekends and stuff, okay? But big picture, folks, this trade, just by entering and exiting, which I don't do, let me repeat, I don't just enter and exit at a date. I optimize during these dates, okay? But just by the pure data on this, it made money 15 out of the last 15 years. And yes, it made money this year, so actually now it's 16 out of 16, okay? And you could have done an option trade on the spiders during this time frame, right? There's inverse relationships to Forex markets, like, you know, for example, you could be trading the euro US dollar. There's a lot of ways to make money knowing these type of odds, okay? And what you don't see as much of, and again, I'm never going to speak badly about fellow colleagues that are in this business, but what you don't see much of is people putting trades out there live ahead of time, like I do, saying, this is what I'm doing and this is why. Because what are they afraid of? Well, what if it doesn't go right? And not every trade is going to win. Historically, I win 85% of my trades or more, okay? So I don't have a problem putting trades out there. My favorite ones I will do publicly to show folks the power, okay? It's all about showing you the power of some of these seasonal moves. And we're going to go over some more examples today. Nice to see you, Greg. Fantastic. So this was the trade now on Thinkorswim, just to kind of show you. So where I circled it here, folks, this right here, oh, let me give a different color there. That's not going to work, is it? Okay. This is the entry date, this green line, if you're just going off of the specific dates. Okay, so if you're just going off the specific dates, you had a nice 3 or 4 day move, had that 3-day retracement where everybody thought, not everybody, the world was going to fall when it was just a retracement back, waiting for the re-entering to the trend. Okay, and there's a lot of ways to play this type of move as well, and I'll show you on a live chart here in just a few minutes. Okay, but again, it was another win with a high probability setup, and really the reason I do these free webinars is to show people that you can really take a look and give yourself an opportunity to be on the right side of the direction, right? We're never going to win 100% of the time, but what we can do is give ourselves that likelihood that we're going to have a much higher probability. I mean, back in the days, if your broker called you up and said, you know, hey, Jim, over the last 15 years, here's a stock, it's gone up X% over these next 3 weeks, do you want to buy it? You're not even going to think twice, but you're going to put any money you can in that, right? Well, folks, we have this data. That's how you should be trading every day, in my opinion, okay? Okay, one of the things that I look at too, again, just trying to show you some big picture stuff here. The intent of these sessions that I'm holding now is to educate and then give you some opportunities, okay? Well, over the last 8 weeks, retailers, okay, retailers are smaller traders that are defined as smaller traders, okay? And they're unfortunately typically wrong, okay? It's just the way it is. So over the last 8 weeks, retailers have been extremely short the S&P, okay? This is for the S&P, okay? And let me type that in there for you. So this is for the S&P or the Dow, okay? Basically the stock indexes, okay? So when you get, and it's around 76% big picture right now. It was at 88% 3 weeks ago. So what this is telling you as a contrarian indicator, okay, more than likely the indexes are going to go higher. Not every day, right? We're going to have retracements, but they're going to go higher because the retailer traders, the traders that typically lose money, are extremely bearish the markets. And what happens? Think about it. If you're a professional with a large account and you know that these smaller lot traders are extremely bearish, you're going to go in the opposite direction, okay? And that's exactly what they do. So we not only have sentiment in our favor for long, when being bullish in the stock market, okay? But we also have a seasonal. So let me show you real quick here something. Let me bring up the E-mini. And I'm going to show you my seasonal indicator here. This right screen right here, okay, this screen here, let me just delete that now. This is off a weekly. I look at seasonality from a weekly standpoint, not a daily, okay? I think it's much more relevant and works better on a daily. So let me make this just a tad smaller so you can see more. Okay. Now, what this is showing you is when you bring up the daily chart on the ES and then you look at the weekly seasonal pattern, okay, this white line right here was back in time on what should be happening. This is back in late September. Historically, what happens in the stock market from a seasonal perspective. So it's pointing up, okay? And then it continues to point up. And we basically top right around summer here of next year. Okay, we have a retracement, then it'll resume again in theory. So basically, I've been only looking for long plays from a seasonal perspective in the E-mini. Okay, it doesn't mean you can't make some money to the short side, but the probabilities aren't as high. Okay, the probabilities aren't as high. Now, when we had this 3-day decline, this was a phenomenal opportunity to wait for that buying opportunity. We got it right here, which I'll explain later, okay? So I still long in the market right now on my personal account, okay? Where I know a lot of you thought you watched the news. Again, I'm not criticizing. That's what most traders will do. Thought the world was ending, right? But if you have the data in front of you and you know that, hey, historically, we should be heading higher. We should be heading higher. We're in a massive uptrend. Funds are buying, okay? Then you wouldn't have been taken off guard. And hopefully you didn't. Hopefully you've been watching some of my public videos and so forth where I was telling you back then, stay bullish, folks. Stay bullish. It's not time to be a bear yet, okay? Again, big picture. Big picture. Okay, so the other thing I wanted to just show you before we get into the good stuff is, since I launched seasonaltraderpro.com in October, the Forex service has been up over, this is the alert service that I give you my trade recommendations throughout the week. I give you stops, profit targets. I tell you when I get in, when I get out, and so forth. Forex has been up over 150 pips. Honestly, it should be more, but the Forex market can be one of my favorite things to trade, but it hasn't been trending in some of the seasonal patterns than what it usually is. But part of trading is understanding that and staying out of some of these trades until we get back into normality, okay? That's part of trading. Futures, 90% accuracy, up over $7,500. These are one contract trades that I'm giving you this data from. Again, historically, I'm 85 to 90% accurate each year. Okay, so this is just in line. Again, these are all public trades that are in the members area that people can watch. From an option standpoint, I had 19 trades so far, 16 winners. Okay, my winners typically and my losers are usually pretty close to equal. Okay, so you're not going to say, well, what about those 3 losers? You know, did that blow out your account? I mean, come on, absolutely not. I usually close a loser out at about a 50% loss on an option trade, and my winners are roughly around the same. I did close some out this week in the 30s and 40% wins just because of the big move up. I was taking quick profits and then, you know, look to re-enter as things give me that opportunity. But you know, part of trading is having good risk management. Okay. So that's current result. People always ask, well, how are you doing? Okay, you can't hide public, right? Everybody that has been a member and that has seen that, you know, these are my results so far since I started. But historically, this is just normal for the way that I trade. Okay. Okay, so let's take a look now. I'm going to bring up Thinkorswim. I'm going to grab my watch list here. And these were some of my favorites for November. So I'm going to do a couple things here. I'm going to show you. I'm also going to try to do some teaching to my indicators here at the same time, just so that you get a feel for, you know, how I do it. Because I know I spent a lot of time telling you, you know, in these webinars, here's some great trades coming up, you know, use your own entry techniques and that, but I thought I'd spend a little bit of time showing you exactly how I do it as well. So I'm going to click first on UNG. Okay, this is a natural gas ETF. And first, let me just explain again, the second screen here, right over here, screen 2, is the seasonal indicator. So anything you bring up that's been around, I have my default seasonal at 10 years, okay? At 10 years of the weekly. You can change that, okay? I like to start my analysis on 10 years though, but it could change, you know, things that have been around 50 years, you could do a 50 year, you could do a 5 year or 15. I keep everything at 10 years initially. So natural gas, again, go back to this white line right here, okay? This is basically telling you that in mid-July, we're looking to go lower all the way now, okay? All the way here in bottom. Isn't that pretty amazing? Over the next several months, okay? So when that happens, here's what you do. So I'm going to move. So now you're looking for shorts. Okay. Again, let me just show you. What we're looking for is these steep moves down. Okay. So once you get into late September, October, you want to take the move down on natural gas. In this case, UNG. Okay, so you can make a note on your screen right around October, look to go short. Okay, now the way I enter in markets, folks, okay, I have my modified Laguerre RSI, which is my #1 favorite indicator as far as timing. Okay, it has to, I only go in the direction of the seasonal though. Okay, that's the way I trade. Okay, then I have a little bit more aggressive indicator, my stochastic. It's there for a purpose. Okay, we'll talk about it a little bit, but I don't want to overcomplicate things either today. Okay, so let me just expand that RSI. So we're looking for shorts. We got a short right here on 11.8. You see that? So right here, we got the blue line crossing below 0.8. That is my entry level right there, which was like what? Right here. Okay. And then we had this nice move down. Here was another one, September, because man, we're still looking for shorts. Beautiful move down. So if you're patient, is what I'm getting at. You're only looking for shorts. Yeah, you could have made money on this retracement back up, but that's not how I trade. Okay, that's not how I trade. I take the direction when I have a trigger in the direction of the seasonal. That's how you're going to be 88% accurate or so by having these type of rules. Okay, and again, look at that seasonal indications that natural gas starts falling out of bed here. Okay, and if you're a person that likes to trade UNG, let me just blow up this. You can go as far out as you want. Okay, and you can see, okay, so now when we get into the end of January, it tends to head down again. Then we kind of go flat. So I don't trade natural gas a whole lot here until September, and we tend to have a move down again and so forth. Okay, then we have a little bit move up. So you can use seasonal indications on anything you want to trade to give you that advantage. And then again, I like to use my modified Laguerre as my actual trigger for my entry with my Bollinger Bands here. Okay. Okay, bonds, ZB. Okay, and again, that could be the TLT if you trade the ETF. Okay, it could be the TLT. It's going to look almost identical in the charts. But October through mid-December, we look for shorts, okay? And again, you can see here, the seasonal part is telling you this. Then when we get to the new year, right, 2019 is right there, okay? We can see where it goes back up. So let me get to current date here for you. So we've been in this massive potential downtrend. And this is something I really want to point out because this is the key right here. Right here was the top on bonds off the weekly seasonal, okay? Right around late September. So I'm no longer looking for longs on bonds. I'm looking to go short until the end of the year of 2019, right? See that? Then we head the other direction. So once I got this trigger here, right around what, 1010 or something like that, it was an easy entry to make move to the short side, okay? Then you got a trigger here, money to the short side. This is how you can have multiple trades within a seasonal window and make multiple profits, okay? Or if you're buying an outright TLT, ETF, for example, maybe you stayed in this the entire time, depending on your strategy, okay? Okay, so a couple things on this, and we're going to go over several examples to show you how I'm trading these, and then we're going to open it up for, I'll look at things you want me to look at. I'm going to give you some of my favorite trades coming up. Again, more of a working session to kind of show you all, okay? And yeah, so if you're looking at the stochastic, this is new to a lot of you folks because I've been using this for a while, just not publicly because it's a little bit more aggressive. But if you know, for example, yeah, I want shorts, the modified Laguerre is specially programmed to be a little conservative, okay? It's like your grandparents, right? They're not going to be overly aggressive, right? Most grandparents aren't. So it usually gets in a couple, 2 to 3 days earlier, and it will have more false signals, okay? But if you know there's high probability going short, you may want to get in a little bit earlier as soon as you get those rules saying we're getting a stochastic crossover, right? So that's why I've always used them both. It also gives me a better opportunity in this type of downtrend, okay? It gives me another opportunity to get back into the trade, okay, if I'm out of it. So I use both of them, okay, but it's a little bit more aggressive, okay, and it helps me get in and out of trades a little bit faster than the Laguerre. That's all. If I had to have one oscillator and one oscillator or only, it would definitely be the modified Laguerre. It's a phenomenal tool that keeps you into trades, keeps you out of getting into a trade that's not going to work out. It's absolutely fantastic. All right, so let's look at soybean oil. And we're going to look at some stocks, some Forex, a bunch of things. So soybean oil, folks. So again, this the green and red line is current price. So this is where we're at right now, okay? And then it shows you the forecast. The white line here is showing you back 20 weeks. This is what it should have been doing. So the seasonal is typically down. Price was heading up, which is even more bullish, okay? But then we were bottoming, right? Let's just say right around October. Right around the start of October, we should be heading higher, okay? Right around October. And then we basically stay in that trend, for quite a while. So again, let me get to current price here. So we're topping out right around the middle of November. Okay, then we hit this retracement. You see how that happened? So you can kind of look at it big picture is what I'm getting at here. We know there's the bottom right here. So we're looking for longs going into October. Okay, that's the big thing all the way now until right around November. So if you look at your triggers, we had this short opportunity right here in line with seasonality. And then we had this long trigger just recently in line with seasonality, okay? So when you have your triggers in the direction of that seasonal move, you have a much higher likelihood of making money, okay? And this is what I do day in and day out. Let me show you copper. So again, look at copper, okay? Pretty easy to see that right here, we start looking for longs, okay? Again, right around October, let's just say. So you don't know exactly when you're going to get that trigger, okay? We got one right here, though, on October 7th. Nice move up. And now we just got another one in November. Nice move up, okay? See how that works? You wait for your triggers. And yes, I have certain ways that I take profits and stop loss. That's all there. That's where I use the Bollinger Band is to mark off my profit targets. My stops are typically like if we got in here, it's going to be at the bottom band. You have to have rules, okay? If the trade doesn't work out, you don't want to blow out your account. You want to go to the next high probability trade, right? Look at cotton coming up, or that came up here, okay? So again, looking at this, we bottom out on cotton typically late September, go up, a little bit of retracement, but basically we go higher now on cotton, right, until almost April of 2020. So those of you that like to trade cotton, anytime you have a long play between now and then, you can take them, right? We have one right here, okay? Came up, hit Bollinger Band profit. Bounce off the middle band here, had a trigger on the Stoke right here, okay? So you can make several trades throughout this high probability seasonal long play. But more importantly, if you're tempted to short cotton, you're literally just feeling dangerous, aren't you? Okay? And that's really why I like to show you. When I'm mentoring clients, a lot of the times they tell me the biggest advantage for them is, yeah, they like seasonality. They're not as crazy as Dr. Keith with seasonality, but it keeps them on the right side. Again, why would you want to short cotton right now? Okay, it doesn't mean you can't make money on it because everything retraces, but you want it to retrace so that you can make money then to the higher probability side, and you can get some big runners on these seasonal moves and literally, double your account on some of these trades, right? All right, OMC, let's look at a stock. Omni Group. We got some phenomenal seasonal trades coming up, folks. But so, with the seasonal showing you here back in late July, it's kind of sideways, right? But then right here, here's the bottom, right in October, we now want to go long. or look for longs, right? So that's the key, okay? Look for longs right around October, okay? So right here, got a trigger, right here, move up. Another trigger right here, move up to current price right now, okay? So again, a lot of folks wonder, well, how do you know what type of trades to take? You just wait for the triggers based off of the seasonal move, okay? And what I have is a scanner off the Modify Laguerre that will show me anything I want. It will show me if there's any triggers, and then I match it to those seasonality, okay? So if I bring up something and it's triggered long, but then the seasonality is an advantage. I mean, again, look at that seasonal move, folks, okay? Go in that direction with a trigger, okay? It's like putting money in the bank, that's what I like to say, okay? Okay, Nike, look at Nike seasonal, okay? So again, we're bottoming right here. We start looking in mid, let's just say August. You want to look for longs in Nike, okay? Again, right here, trigger, nice move up, right? Right here, you wait for that retracement right here. I don't need to make money on this short play, okay? But once I get the re-trigger, we go long again, okay? And that's the mentality that I have. And it wasn't always something that I had because, you know, hey, if you can make money on both, that's even better, right? But you don't need to make money on both sides unless this was a seasonal short window, which it wasn't, okay? It wasn't. So I didn't take this one. But to make money here and to make money here, I think you'd all be happy, right? All right, Aussie Swissy. So again, we're looking to go short November, December, right? Does that make sense? Because we typically top right around mid-October, okay? Right around mid-October. So when I got the short trigger right here in November, right here, had this nice move down to the bottom Bollinger Band, okay? Now look at this move. When we get to April, you better believe I'm going to look to short Aussie Swissy, okay? Or you might say, well, Dr. Keith, what about right around January, look for a long play? Absolutely. So we got a long and a short play potentially coming if we have triggers during that time period on the Aussie Swissy, okay? US dollar, Singapore dollar. This is a trade that I just had on the alerts that made money. And let me explain though. Again, the reason I'm showing you is to explain. Look at these seasonal moves, okay? Right here, we start looking for shorts now for the first quarter, right? So once we had this trigger, this was a no-brainer, folks. First of all, look at this from just a pure price standpoint, okay? We're on a downtrend. This is just a higher low now, okay? So even if you didn't know seasonality, that's a pretty nice looking trade on the US dollar, Singapore dollar, right? But then you look at the seasonality, okay, and you're like, well, wait a minute, this thing just drops off the earth and through April now, right? This was an easy trade, hitting profit target 1 and 2 in just, 3 or 4 days there, okay? And this thing's going to head lower. I'm out of the trade now, but if we get a retracement, I'll look to short this again, okay? I might get a few shorts within this 4-month window, okay? These are the type of trades, okay? These are the type of trades. If you just do these, you can build that account up, and that's what it's all about, right? Because I know a lot of you, I've had a lot of conversations with you. I know a lot of you would love to trade full time, okay? All right, and then just bringing up the ES again. What I wanted to show you here was, so we all know, I mean, there's been no secret publicly. I mean, look at the video, the YouTubes. I've been bullish, right, this whole time, and I'm still bullish, okay? And again, not because I'm smart, because I'm just looking at the data. I'm looking at what the retailer traders are doing, the ones that lose money historically year after year after year. I'm looking at what seasonality is telling us. Okay, so I would love to make everyone think that I'm the smartest guy in the world. I'm not. All I do is look at data and make pretty easy decisions. Okay, so in this case, though, we've had this massive uptrend. Okay, and you can see we had a trigger on the Laguerre back in October. Okay, but then that's been it. Right? We haven't had another one unless you took the curve, which I will take curves as well as a more aggressive trade, or again, my stochastic cross right there, which gives you another entry right where it rebounded. But what you can do is, let's say we go from a daily to a, let's see, I think I've got it. Let's see, favorites, 4 hour. Let's look at the 4 hour. So you can use like the Laguerre as a trigger on smaller time frames to re-enter or get in and out of a trade. Okay, so off a 4 hour chart, there was a good entry right here. Okay, and that was a beautiful one, right? There's another one right here, another beautiful entry. Okay, off the 4 hour. And some of you like to trade off a 4 hour. So if you know there's a seasonal window, you like to go to smaller charts because then you can put a stop with less risk, right? Off smaller time frames, you're going to have less risk, correct? And you could have hit both of these trades there, okay? So that's just a little suggestion that if you like, but you don't want to always have the risk off of the daily, you can go to a smaller time frame. I love the 4 hour to re-enter a situation that the daily's not giving me the option to do that, okay? All right, let's look at Aflac. I'm going to go back to my daily. Okay. So this is a recent trade. Again, I did an alert service, but I just want to show you. So again, right here, we were bottoming on Aflac August. Okay, and then we look for higher moves now until the end of the first quarter of next year. Okay, so again, right here, trigger. It's amazing how that happens right around that window, right? Nice move up. Now we just had another trigger recently right here, and we got out with, I think it was a 45% profit right about here yesterday. Okay, and the reason why I got out slightly early was a lot of times when you have those big moves up, you're going to have retracements, and this will still head higher. I have no doubt about it, but I wanted to make money, and if it does retrace, I'll look to re-enter now when I get another trigger. Okay, or you can go to that 4 hour time frame and re-enter. Okay, so I'm about preserving data, preserving income, and I know that Aflac's going to give me another opportunity. Okay. Okay, let me bring up the slides for just a minute. Okay, so I just showed you my seasonal indicator that works for anything you want, okay? And I'll show you that when you give me some examples that you want me to show you in just a few minutes. But what I want to show you, the other thing that I offer on my website, seasonaltraderpro.com, is my data mining. And people think, well, what does that mean? And basically what it is it's my favorite trades throughout the year that have high probability setups, okay? So let me show you. And it's an Excel sheet where you can then sort by date. You can then sort by your favorite product or products. Let's say you love to trade Amazon. You can see what kind of seasonals come up from a data mining perspective on Amazon. And then what you can also do is sort by probability. Maybe you only want 97% probability trades, right? I mean, that's not bad. So this is APD. I just wanted to give you an example. APD is a long play, October 24th to January 5th, okay? It's worked 35 out of 36 years, okay? That's what that means. So again, I don't just go in off of these dates, but the reason I have enter and exit dates is if not, I can't data mine for you. I can't give you results without specific dates, right? The sickness to all this, okay, yes, the sickness is that the results actually improve if you wait and go off of the triggers that I just showed you, okay? So let's bring up APD. So remember, end of October through January, we're looking for an entry on APD. Okay, APD. So right here, this green line is when we start looking. Now, I'll look for seasonals a week earlier or so as well, okay? But I just wanted to draw the line based off of the data mining, okay? Well, we got a trigger on the Laguerre a couple days later right here, had this massive move up, okay? Or the Stoke, you can't see it because it's right there, actually triggered the day of the date, which is kind of crazy, all right? But again, the reason why I'm showing this all publicly to you all is to show you that, yes, you can do this. If you have and know these high probability trades, again, I'm not going to go in just in the date and then exit. Okay, why would I exit on January 5th and lose all this money? I mean, you would have still made money, but you know what I mean, right? You would have lost some of your profits during this down move, okay? What you would have done is probably gotten out right here when the Laguerre triggered short, okay, or the Stoke, okay? So you would have made this money right here. So I don't just go in and out of those dates. Again, I got to say that over and over again. Don't give money away. And if this thing would have kept coming down, we would have never got a trigger on the Laguerre, and we would have never made money, but we wouldn't have lost money, okay? And that's the key, folks. I always get the question, well, Dr. Keith, this is great, but what happens when something isn't following that seasonal? Then I don't take the trade. Okay, if it's not following the normality, if it's not doing what it should be doing, you have in options, right? You have over 700-800 option or stocks you can trade. Why would you have one that? Why would you trade one that's not a high probability? Okay. Okay, and then AT&T. I just grabbed a snapshot of literally 3 different trading instruments off the data mining. Okay, again, I've got data mining for stocks. I've got a separate spreadsheet for futures, and I got a separate spreadsheet for Forex. Okay, but again, look at AT&T from 1024 entering to 1227, 30 out of 35 years. Okay, so again. So during those, I just create a watch list is what I do, folks, by month of my favorites, okay? And then when I get triggers, I take them. It's that easy. And then obviously I use my seasonal indicator as well for everything else I want to trade. You can bring it up, which we'll do in a minute as an exercise. That's how I do it, okay? But again, just give yourself that position to be correct more than you're going to be wrong, okay? When you see something that, again, for Air product, okay, 97% accurate with 36 years of data. That's not luck. What's going on there? Yes, this is recorded and will be sent out to all of you, Barney. What's going on there? What's going on is that funds are buying, okay, during this time of year. Okay, just like when you wake up and you brush your teeth and drink your coffee, hedge funds have routines, and it works over and over and over again. In this case, 35 out of 36 years between 1024 and 1.5 price closed higher, okay? So think about doing options, right? You can certainly do many trades within that time frame and so forth, but okay, it's not luck, folks. It's routine from the folks that make the money, okay? The S&P, okay, the March contract, 1119 to 1228 has made money. It's been higher, I should say, 87% of the time, 32 out of 37 years. So again, why would I be a bear? It doesn't mean you can't make money being a bear, but why would you just not stay in the direction that's worked 87% of the time over 37 years during this time frame, right? And that's where, go to your 4-hour chart. When you get your triggers, you can take them. Okay, we just saw examples of that, right? That's what I really want to show you. So some of my favorites coming up, okay? In fact, let me go to Thinkorswim. By the way, folks, let me show you this. I'm going to do another webinar later over the new year. There's a stock that's made money during January 28th and February 19th, so a fairly short window. It's made money 33 out of 33 years. All right? And I know there's always going to be some of you that think, well, then it's got to not work this year coming up, right? Maybe not, right? I have no idea. All I know is that if you get a trigger long during this time frame, and again, maybe you go off a 4-hour chart to really try to get your entry, okay? It's worked out 33 out of 33 years. You better believe I'm going to put that in the alerts, my alert service coming up, right? And the data mining that I have, yes. So there's over 800 stock data mining. There's over, I think, 1,000 futures and Forex. And I also have a bears one. Those either are bears for stocks that are even larger than the 800. Okay, so just to give you an idea of the number, there's plenty of data mining. I know clients of mine that literally just uses the data mining to do their trading. Okay. All right, so let me bring up Thinkorswim, and I created a watch list here of the ones that we just put on that sheet. So the dollar index, okay, this was a trade here that I took. Okay, again, this is exactly what you'll see in the alert service as well, but I got a trigger short right here. Okay, so this is where I entered right here, took this move down. I got out at profit target 2. It certainly continued lower, right? I could have stayed in that, right? But I got out at profit target 2. Okay, but again, look at the seasonal. Okay, look at the seasonal move. None of this should surprise you when you look at the seasonality. Okay, let me move that over there for you. Okay, this moved right down to here. Now what we're looking for, folks, going into the new year, we're going to continue down, then we head up going into February. Okay, so again, these are just high probabilities based off of using these seasonal moves. Okay. All right, so gold. Okay, I publicly said that, again, this is no secret. Gold typically heads higher going into the new year in and year out. Okay, and it's just been consolidating now. So an aggressive trader, in all honesty, this is the seasonal indicator. So we basically bottom right about now typically, okay? Look at this 3-month move on gold, okay? What does that equal? That equals a smiley face, folks, okay? How's that? Maybe wear some glasses like me, like that, there, okay? Now, if you're trading like GLD, and you want to do a 3-month option play, you could probably get in right now. You're in this upward channel, okay? I'm getting a stochastic trigger, which, but you know, we're right now. I'm not getting anything on gold on the futures contract to go long yet, okay? But if you're gonna do a 3-month play, okay, but what I'm waiting for over the next couple weeks. At some point, you know, I want this to retrace, give me a good entry point, or maybe it's in January. There's plenty of room and time to make money on this move up, okay? So keep that on your watch list with your entries. All right, Amazon's another one, okay? Look at Amazon here. Right here, we are bottoming, right? Going into the new year, and we're heading higher. So I'm just getting a trigger at the close of today, and I got one a couple days ago on my Stoke. Again, that's how they typically work. And typically when I get a Stoke arrow and then a day or two later a Laguerre cross, it's like putting money in the bank here, okay? So I wouldn't be surprised to see this head back up right now. But anyway, looking at the seasonal on Amazon, right? we're going to be heading higher, folks. We're going to be heading higher. So yeah, some of you that have my alert system, you won't be surprised if you see an Amazon trade Sunday night, right? And how long do you go out on that, right? It's a good seasonal play right now, and we're getting a great price, probably, right? So again, nothing's guaranteed, but we sure look like we want to go higher right now on Amazon. All right, and look at Apple. I know when somebody asked about Apple, we just hit a high today, okay? But again, when you go back to the seasonality, okay, this was back right after earnings here in September. You go higher, but then you have this kind of range on Apple typically from seasonal, and then in January it takes off. So this year it's actually been going up, so it's been stronger than a seasonal non-move, which means if we are lucky enough at some point we'll get a retracement, we'll want to go long Apple. Okay, the last trigger that I got was this stochastic cross, my Laguerre move back up right there, which caught that. I didn't take that one, but Apple going into January again. Why is that? Because funds are all about habits, and big hedge funds and so forth will buy Apple at the beginning of the year. Okay. Sure. Let me bring up Disney. Someone's asking about Disney, so let me bring up Disney. Disney is unbelievable bullish start of the year, okay? Year in and year out. You can go back in your chart and look. Very, very bullish in January for the first quarter of the year, okay? You can look for your long plays on that, okay? There's also some data mining as well that I have that gives you specifics on that, okay? Okay, so I'm just looking at some of the chat bar here. I think I've covered those stocks. Perfect, perfect. Okay, so type in if you want to look at seasonality of something right now. Let's spend a couple minutes here and we'll do that. I don't want to spend too much more of your time, but I appreciate you all attending today and hope you like what you're seeing. If you want to see anything, type it in and I'd be more than happy to show it to you. Broadcom's one of my favorites. Sure, let me show you that. Okay. Broadcom is AVGO. Okay. So again, look at this. This is a thing of beauty, right? So we basically typically bottom right around mid-September from a seasonal perspective, and then we head higher. You see that? This means we're heading higher, okay? So once I got a trigger right here, right at the end of September, okay, took this nice move up on Broadcom, okay? And that definitely is in the data mining, okay? But year in and year out, you can make money on those. Okay, I'm just looking to see if anything else. Oh, yeah. So let's look at Domino's Pizza, right? DPZ. Sure. All right. So Domino's Pizza. Look at this beautiful seasonal pattern on pizza. Okay. This is an uptrend. We basically bottom right around August typically. So again, you can just be patient and wait for the trigger. So we got a trigger here right at the end of September. Okay. It was right after earnings. Okay. This nice move up. Okay. I don't get in on earnings. Okay. So I would have had to get in this move off of a smaller time frame once it triggered. Okay. But Domino's, when you get these retracements, it's going to head higher, folks. It's going to head higher. Okay. That was a good one. Yeah, definitely. You can look at like USO or crude oil. Yeah, you can see here. So for example, okay, crude typically heads higher now in January. Okay, so if you trade the USO ETF, okay, January, I don't like that color there. January is a good long play. And typically we had lower right now and we haven't been. So that's bullish, folks. So yes, any sort of retracement will look to go long on oil. Okay. Sure, the energies. Let's look at XLE. So again, we basically bottomed around 916. We headed up, and then December though, right? December is when we start looking for long. So I don't know if there's a trigger yet. Let's see. We had a trigger right here. Right here. Came back, and then it had its move up. Okay. Had another trigger right there. Okay. I know a lot of you trade the XL, right? Very popular. Yeah, and so the way that works is if you were using let me blow up this for just a second. Let's say you want to look at all weekly expirations. Weeklies. Okay. What you can do, part of that package with the Laguerre, it'll give you long triggers, and then you can go to the chart and see if it matches the seasonal. Okay, that way you don't do all the research yourself. So let's say Applied Materials. This is a trade we actually made money in on the alert service. Okay. So we had a trigger 2 days ago to the long side, and it's matching the seasonal long. See that? So that's why we took it and made money. We're out of this trade already with the debit spread at 40, I think it was 49%. Okay. So yeah, so you can look at anything you want. You could go to your personal watch list. You could go to futures, Forex. That's all part of that. Indicator is all part of that. Okay. Okay. So let me answer a couple questions that we have. All right. So one of the things that what you can do is let me bring something up here real quick. Apologize. I thought I had it ready, but and this will all be in the promo that I'm sending out to you, all these links. But if you want to try some of the alert services where I give my entries and exits and so forth on trades throughout each week, feel free. You can sign up. There's a 2-week $1 trial. Okay. And again, I'll send you those links today. I also am having on the non-subscription products, I am having a 50% off holiday special. So if you want basically the entire package that gives mentoring with me, that's the link. But then I also have the data mining. So let's say you only trade Forex, okay? You could get the data mining bundle with the key dates for everything that, some of the highest probability trades, right there, okay? Or if you want the indicator, the seasonal indicator, right there, okay? And the way that works is, so I know these products, when you go to the website here, let's grab it here. So when you go to the website, the seasonal trading link is the mentoring, and then it'll show videos to give you ideas. The indicators that I have, which is the modified Laguerre, the seasonal indicator package, and the custom stoke. And then the data mining. So when you click on seasonal trading, the data mining will have the bundle, which has everything, or maybe you just want the Forex, or maybe you just want bulls or bears or futures, okay? And then also the alert services, if you want any of the bundles, all 3 alert services together, okay? And then there's always free videos on there as well, or you can subscribe to my YouTube channel, okay? So that's where we're at right now. Let me bring that back up. And basically, if you purchase anything over the next 48 hours with a non-subscription service, you're going to get a free 30-minute appointment with me where I'll either help you set things up on anything or answer any questions you have. I know that's a lot of time on me, but with the holidays and everything, my kids have another week of school left and I've got some time. So you do that with the next 48 hours. That's part of the package. If you have questions, you can always email us at support@seasonaltraderpro.com. Again, I'm going to start holding more of these, like I mentioned, every 2 or 3 weeks minimum, just to get you all excited about seasonality, because that's how I trade. That's how I make money. And really, I feel your frustration if you're not making consistent income. I used to be there. And if you follow these high probabilities and you wait for these triggers, I'm telling you, folks, you're going to be successful. Okay. Well, all right, folks. Well, again, thank you so much for attending. I promised I wouldn't be much more than an hour, and it looks like I'm meeting that. Again, reach out if you have any questions. Other than that, again, I'll have another live webinar, I think in 2 weeks, and we'll go from there. But again, keep in touch. Email me with any questions or comments. I'm always looking for that. And I hope you enjoy and have a great holiday if I don't talk to you, okay? All right, take care, everybody. Bye now.